This trade on screen right here is the exact trade I took to make $615 trading the Nasdaq this afternoon. 54 points caught on Nasdaq, and I'm going to show you in this video exactly how I caught this, the reason behind the entry for this trade, and how you can catch trades exactly like this. So let's jump straight into it. Obviously, the first thing you have to figure out is whether you're looking for long or short positions. So if we zoom out onto the higher time frame, you can see we're coming down and we've got this obvious low. If you can go as high as the weekly here to figure out, because the weekly doesn't usually show you much, but in this case we have a weekly inverse, and we also have a nice and obvious weekly low at the bottom of the new week opening gap from all the way from the 10th of October here. So that's the first sign, and obviously you're going to need to look for lower time frame signs of bearish price action, which we have. So on the 4-hour time frame, as you can see at the time, we had swept this high with very good bearish momentum, and we'd failed to sweep any sell side after sweeping that high. So these are the reasons for the trade. Now, we had this 15-minute fair value gap right here. Now, the 15 and the 5-minute time frames are really, really good for looking at fair value gaps that are A, unfilled, and B, for deliveries when entering into a trade. So we have this 15-minute fair value gap right here, and all I was looking for was a nice delivery off of here for a short back down. As you can see, we never took out the major low after the 4-hour sweep, and we never took out this major low at the start of the new week opening gap as well. So if we come down the time frames, obviously you can see we've pumped, but we've just had Nvidia earnings, so obviously that has came out extremely bullish, which is why the market has pumped afterwards. But as you can see, this is the 15-minute gap right here, which is also, by the way, a 15-minute BPR. So all a BPR is, if you're unaware, is when we have overlapping fair value gaps, as you can see, which we have at the top here. So all I was looking for was a nice inverse fair value gap on the 1, 2, 3, or 5-minute time frame. I was very, very close to taking this inverse, potentially, if we got this, or as well, this to be fair, this inverse was better because we had internal liquidity. So this inverse was the one I was looking at taking first. However, we didn't get it, so I simply did not take it. But we got a remanipulation above this high. Now, this is extremely, extremely good, because once we just pump up like this, it's not very high probability taking the first inverse back down. However, when we take internal liquidity, when we create internal liquidity, sorry, and come back up and resweep the high, this is called a manipulation leg. So this low to this high, this is the manipulation leg. As you can see, we leave a super obvious 1-minute fair value gap right here. And obviously we get this as an inverse fair value gap. So I'm bearish. We're inside of a 15-minute gap. As you can see on the hourly time frame as well, we were also respecting this hourly gap at the time, which was also an hourly BPR. And another confluence is we were respecting the 50% of this range at the time. Try to ignore Nvidia earnings, the spike that we've just had after that. Obviously, this was the candle that I was trading, and we had a really, really nice delivery from the 50% of that leg as well. Now, I simply enter when we get a candle close through this inverse. So I entered here. Stop loss was calculated for 40 points. I wanted to cover the high because obviously when we take out a high inside of a fair value gap, this high becomes protected, this becomes the rejection block, and so on. So you should not see this high re-hit if we are truly bearish. So in circumstances like this, I put the stop loss at the high. My take profit was at this intermediate term low, which is just simply a low inside of a fair value gap. As you can see, this low is inside the 1-minute fair value gap, it's inside the 2-minute, and it's inside the 3-minute. And also, this was the start of a 5-minute fair value gap as well. So if you guys are unaware, unfilled 5 and 15-minute fair value gaps have extremely strong draws on liquidity. So it was a nice draw on liquidity for that reason as well. Now, the way I risk managed this trade, I moved stop loss to break even when we hit this low, and I also scaled half of the position. And the reason for this was because I don't usually trade PMs. We were very, very close to the end of the session, and we were already 1 hour in profit. So I'm more than happy to scale 50% there, just in case we do get a reversal and we get tagged at break even. At least I'm not completely in a break even trade. So I scaled 50% of my position at this low, and I scaled full TP at this intermediate term low and the start of this 5-minute fair value gap. And yeah, I entered with six micro contracts, and that made me $615. So a great day. Don't usually trade PM session, but this absolutely printed. Was super patient. I let these longs work here because I knew I had a bearish bias. I was just waiting for these higher time frame gaps to get tapped into. So this was absolutely perfect. If you are interested in trading alongside me, check out the links in the description. You can join my Discord. There's a lot of free value in there as well. I do free live streams every single Monday. Literally for 100% free. Anybody can join the stage in the Discord. And yeah, drop a like, subscribe if you want more content like this. Hopefully they're extremely informative. This has been a full trade breakdown, and I will see all of you guys in the next video.